okay, where how to manage your debts in a smarter way, okay, because managing debt is very crucial when it comes to financial planning. If assuming that this client of yours, okay, has a lot of debt and then has no surplus, whatever surplus he has, he then goes to paying his debt. This person will be very difficult to reach their financial goals, because you can't reach any financial goals without ensuring that you have a surplus. Okay, now for this person that spends more than what he earns, he is in a little bit of trouble. Specifically, he has to find a way to manage his deficit. And typically, this is done by using credit card balances or taking on personal loans, which then puts a debt burden on Baka. So Baka is in this situation. Okay, and based on research, more than 40% of Malaysians have lingering debts. So if you have a debt issue or your client have any debt issue, they are not alone. But before that, okay, let's understand debt. The good thing is that not all debt is all bad. Okay, there are good debt and also there are bad debts. So good debts helps you to increase your net worth or helps you to generate value, while bad debts actually destroys value. Bad debts are those that do not increase your wealth or is being used to purchase goods or services that have no lasting value. Now, how do we differentiate the both is based on two factors. Okay, what is the purpose of the debt? The first one is the purpose of the debt. Is it for productive usage or if it's for leisure and entertainment? If this person take a loan to invest in funds that give you better return, for example, taking ASB financing and investing in ASB, okay, that is a good debt lah, because you are taking a loan that is around, I think about 3.754%, and then your returns is much higher than that. But for example, if this person take a loan, a personal loan to pay for their annual vacation, then that is considered a bad debt. Now, another factor to differentiate whether this is a good debt or bad debt or not, it is based on the interest rate. Okay, anything more than 5%, we would consider it as a bad debt. And anything lesser than that, then it is actually okay lah. Now, remember, to be considered a good debt, the debt must be lesser than 5% and it is being used to acquire something productive. But let's say lah, which is this person go for taking a loan for study purpose, okay, study loan, which is productive, correct? But with a high interest rate, for example, a personal loan of 10%, then it is still a bad debt because the interest rate is just way too high. We'll need to find alternative debts to fund that kind of productive expenses, productive usage. Now, just give an illustration of what exactly a bad debt is to ensure all of you get a good understanding of it. So these are some of the example of bad debt. If your client wants to buy a classic car for leisure and non-productive use, okay, to just display at home, hate to say to it is that this person will need to buy on cash or credit card. Again, if this client of yours wants to go on family vacation, then they will need to use cash or credit card. Okay. The caveat for using credit card is that they must settle all the outstanding statement balance before incurring any interest. Then you will also gain with the points received by using credit card. So these are some of the illustration of a bad debt. Now, good debt is some illustration, okay, on this good debt is actually, for example, you may take a car loan, okay, to buy a car and become Grab driver to earn side income, okay, or take a 0% credit card EPP installment to buy large appliances. Or for instance, okay, you take a home loan at low interest and use it to buy an income producing asset. But do take note is that if this person take a home loan, but the property remains empty and untenanted for more than 6 months, then this becomes bad debt. Similarly, when taking a car loan, while the car is being barely used, then it also becomes a bad debt. Now, let's move on to the next one is that let's do a little bit of quiz over here. Let me launch the poll over here for everyone to answer. Okay, let's launch this poll. Let me see. Yeah, launch this poll. Okay, no. It's not this poll. This poll. Okay. Which of this scenario is a bad use of credit card? Which of it is a bad use of credit card? Is it A? Is it A? Okay, sorry. Is it A as a payment instrument? B, rewards from membership? C, long-term debt? C, short-term debt? D, long-term debt? Or E, I don't know. Which one is the answer for this? Okay, can everyone answer this one? Which one is the answer for this question? Okay. Okay, so most of you answered correctly, which is the long-term debt. Now, let us further explain what it is, okay, for the next one, okay? Thank you everyone for your answer. Now, a lot of people actually ask us as well, is credit card a good debt or a bad debt? Okay, because people ask is because banks are charging a high interest rate of 18%. Now, the answer is actually it depends on you. Depending on how you are using your credit card, the scenario might be different. Now, let's see. If you use it to make payments of goods and services, especially for big purchases, and you do not want to be carrying big cash, then it's pretty good. Or if you use it as a reward membership program, because where you get some privileges, some discounts, or even sometimes cash rebates as well. This is a form of good way of using your credit card. And of course, credit card can also act as a short-term free good debts where you have 20 to 50 days free interest debt. But if you are using it for long-term expenses, okay, where you pay minimum, okay, with outstanding balance of 15 to 18%, then it is not good. So a lot of my clients, as well as my sister, okay, they do not understand the outstanding statement. When they pay the credit card, right, there's minimum, okay, minimum balance, outstanding balance, okay, or statement balance. So my sister, a classic example, just to example, but it's a real life example lah, she pay off the minimum only. She tell me, hey, this one I spend 1,000 ringgit every month, but I only need to pay 200 ringgit leh. So I've been doing that for past few months already. The moment I hear that, I had a shock. Okay, because she works in a bank. Okay, she works in a pretty big bank and she don't know how it works. So that gives me a scare that actually can't be thinking that a person that works in bank, they should know everything related to credit card. So she has been paying interest of about 12% every month. So we will need to understand how credit card actually works, and we should always pay the outstanding balance, okay, to use it correctly. Because if you are using it with a 1 to 3, that is considered as a good debt. Then you can continue using it. But if they roll the credit card debt and is being charged with a high interest, then it is a bad debt and they should definitely stop it. Okay, so a lot of the times, some of the clients, they don't even know whether they have a debt issue or not. So how do they actually know whether they have a debt issue? Is that where they have increasing credit card balances every month. to the point that they have reached the limit, or when they have already run out of money before salary date, okay, or decide to borrow in advance, okay. So then also they have a high debt service ratio where 60% of more of their salary is being used to pay off debt instruments, or they take on one loan to settle another loan. So what can they do if they know they have a debt issue? But before that, let's move on to the next slide to see how does personal loan actually works. Okay, this was also a realization to me when I spoke to more people. A lot of people don't know actually how the Malaysia personal loan actually works. Now, let's go through it one by one. For example, if your client borrow 10,000 ringgit from the bank and the interest rate is 5%, and then this person takes a 10-year punya loan, okay, so how to calculate the total amount of borrowing is that 10,000, okay, multiply with 5%, okay, which means to say 1 year this person will need to pay 10,500 ringgit. So the 500 is the interest that this person need to pay lah, 500 ringgit, that the interest that you have to pay for borrowing 10,000 ringgit. But because this person borrow for 10 years, so means to say 500 times 10 years, which is 5,000 ringgit. Okay, then the monthly installment, how they count is actually like this. You borrow 10,000. Okay, that is your principal. Your interest is 5,000 because you borrow 10 years. Okay, so 10,000 plus 5,000 equals 15,000. So 15,000 divided by 10 years, and each month you will need to pay 125 ringgit. So what does this mean? Means to say, right, on a monthly basis, when you pay your 125 ringgit, you are also paying the future interest already. Okay, because personal loan is not like your housing loan. Personal loan counts on a flat rate basis. Means to say, even on year five, your interest is still based on 10,000 ringgit. It will not reduce like how the housing loan actually works. So when it comes to personal loan, okay, it actually doesn't really make sense for you to pay in advance, because anyhow you have to pay the interest that is being charged already. Okay, so of course, if this person wants to be in financial free debt, they just do not want to think about the debt anymore, then by all means they can pay advance. But technically speaking, financially speaking, to calculate it, it doesn't make sense for you to do so, because you are already paying the principal, you are paying the interest in advance already. Okay, so this is actually the way how we calculate personal loan, and unfortunately, a lot of people do not really understand it and think that a 5% interest rate is very cheap. So they can borrow it without understanding that it is considered one of the most expensive loans after credit card. Okay, because it is calculated based on flat rate basis. Now, these are some of the disadvantages of personal loan. Of course, it is a long-term commitment. And also, if assuming that now you are being charged 5%, and some banks, they will set a rule is that if you miss payments more than 3 times, then the fee and penalty will be quite substantial. It could go up to 10% or even more. And also, if you have too many credit cards, will lead to credit damage. And sometimes people, right, take personal loan unnecessarily. What it means is that this person could be maybe have a credit card loan, and maybe his credit card loan is about 20,000. But then when he go to the bank offers a personal loan of 50,000. But technically speaking, this person only needs 20,000 to do the refinancing, so only borrow 20,000, correct or not? But this person was swindled by the personal loan officer and get another 30,000 from it. So this caused unnecessary debt for this person without understanding how personal loan actually works. Borrow money need to pay back one, this is not a free money given by the bank. Okay, otherwise how bank make money from you? And last but not least, some of the personal loan also, if your credit score is not that great, they might require a collateral or even a guarantor. Now let's look at the next slide where to understand that actually most of the bankruptcy cases are due to personal loan, as you can see over here on the table. And then some people might actually argue that, okay, actually, personal loan bankruptcy rate has actually been on a reducing trend. Last time, 16,000 people bankrupt in a year. Now only 2,000 plus people only. Okay, but in actual fact, it is due to the increased threshold of bankruptcy. From last time, 30,000 considered bankrupt already. Now 100,000 only considered bankrupt. Okay, so this is actually the number of bankruptcy cases in Malaysia, and you can see after personal loan is actually buying vehicle. Okay, this is pretty common as well, where the youngsters, when I just started, when I just graduated, how many years ago? Quite some years ago. Okay, I joined a management trainee program with different banks as well. So this program, most of them, their salary is about 2,006 to around 3,005 like that. So I know this exactly, this friend of mine, how much he earns. Okay, he earns close to 2,008 like that. So this 2,000, he earns 2,008. The first thing that he buy the moment he got his salary is actually a phone. I remember that time was a Huawei P10 or something like that. That time was close to 3,005. He actually buy a phone that is more than his income without a blink, just like that only. Okay. Then it got me to understand actually that is very common among fresh grads, is that they buy phone already with their first income. Few months later or even few years later, they will buy a car. Okay. But then in my mind that time is like, how can all these people afford to buy a car? At that point of time, my friend somehow buy a Honda City. I was like, Honda City, that time you will need to pay a loan close to 1,500, 1,800 ringgit. With their income, what are they going to eat? How are they going to pay for their necessities? So it also makes sense that after personal loan, buying vehicles is also another factor leading up to bankruptcy, because millennials are just chasing after the fame and glory to actually show off to their family members that they have already made it. They bought a vehicle, they bought a Honda City, and then they want to just show it off. But little did they know, actually, it is a high cost for them to maintain a car, and also their hire purchase is also at a pretty high percentage according to their monthly income. So this is actually the awareness of millennials that they need to start changing. They can no longer start chasing after fame, and then it will then lead them to bankruptcy, because we do not want them to be in a debt spiral. This is actually a very dangerous state of personal finance. Okay, some may not even realize, okay, that they are in a debt spiral problem. Debt spiral is where you spend more than what you earn and you borrow to fill the gap. So you are living the lifestyle that you cannot afford. Okay, you will realize that more and more of your income goes to paying debts. Okay, even if you have bonus, large promotions, or you are not able to save or invest, because this additional income goes in paying accumulated debts. Now, when it comes to debt, it is crucial when your clients come to tell you that they have a debt issue, they should actually look into their credit score. By looking at their credit score, they will have a full view of the loans in terms of how healthy you are from a loan perspective. Okay, you can always get a credit report or credit score from credit bureaus. For example, I personally use Experience Information System. It's very affordable. It is only about 19 ringgit, and you can get yourself a I think what they call is a PCRP credit score, personal credit report plus, that you can see all your details about your loans, which is only 19 ringgit 60 cent. It is probably lesser than an amount of a Starbucks. Okay, and then you'll be able to have your credit report. So this credit report or credit score is like your your report card. It basically tells the lenders how risky of a borrower you are. So the higher the score, the better your credit profile. So when it comes to purchasing your new home or new car, you want your credit report to be in a top financial shape. So this can influence the loan amount offered and the rate that you will be charged. So, and also it tells you how likely and the probability of you going to get a loan. So when it comes to getting a credit score, a good credit score, it is very crucial. So some of you might be thinking that, no worries lah, I pay my loan consistently. I should have a good credit score. That was what I was thinking as well. Okay, I thought that I have a good credit score because I never miss any of payments. But then after that, when I look into it, I then realized that my credit score, it is just average only. It is not very good because there are some factors that also affect it, not only based on how often or how consistent you pay the loans. Okay, so most credit score range from 300 to 850. Okay, so you want to aim a score of at least over 700 lah. Okay, to ensure that you can access to the full range of products out there in the market. Now, let's understand some of the credit report, how it actually works. So over here, okay, over here where we have the outstanding credit, this will show all the outstanding credit facilities that you will have. For example, your personal loan, your credit card, your mortgage, your hire purchase, everything will all be there. And then also under here, there will also be a special attention account. If you have remarks here over special attention account, it means to say it will be quite difficult for you to get good score and also credit as well, because you already fallen under here and you will need to ask the banks why you are under this special attention account and should then get it removed. And also over here will show the credit facilities that you have applied for the last 12 months that is still pending. Okay, that is not yet approved, or there's still documents needed from your side. So over here, you can see all of it. And then also here is that you can see installment in areas for the past 12 months. Here will show you any of the missed payments over the last 1 year period. So the numbering here actually shows the number of months that you have missed your payments. Okay, how do we actually see an example of a rejected credit report? Is that there are, for example, for this person 1, 2, 3, 4. So missed a total of 4 months for his study loan. Okay, and also this person have a high utilization of credit limit. So the limit is about 60,000, but his outstanding balance is close to 58,000. So this is how it means, is that even though sometimes people think that they pay consistently, but your outstanding limits also falls in this threshold as well for them to determine your credit worthiness. Because banks or financial institution will definitely look into your repayments. Okay, some banks is that if you miss more than 2 months, then they will straight away deny. However, some financial institution will also reject, okay, if your account is under legal status or with special attention account, or if you have more than 60% of debt ratio. So ultimately, lending decision depend on the risk evaluation and policy set by the individual financial institution. But using the same information from credit report and any other sources, one institution may approve an application while some may not, because different institutions will have a different risk appetite. Okay, so what are the top 4 strategies to have a good credit score leh? Okay, how to make sure your credit health at least improve is that they look at your repayment history. Make sure you don't miss any of the payment, not more than 2 times a year. And then we talk about legal history. So make sure you clear up any any outstanding legal issues that you have with the financial institution. So one thing to take note is that the moment you have a legal case with the financial institution, right, it will stay in your credit report for at least 2 years. So after 2 years only, you can tell the credit bureau experience to remove it from it, okay, because it has up to 2 years already. So make sure that you don't fall into legal history, because it will take you a long time for you to be able to get new credit. Now, the next one is actually the facility mix. This one is a little bit funny because you need to have at least one credit facility, which is like your credit card or your car loan to have a credit history. But try to not have more than 3 unsecured credit facility, like you have your credit card lah, personal loan, or even another personal loan at any one time. So it's a little needle hole to tread. And last but not least is the utilization. Keep your repayments to less than 60% of your total income. And if you get rejected, okay, don't go and apply and again and again. If you get rejected, wait for 3 months before your next application. Now, let's move on to the next one is that what are the 4 key steps to deal with debt? Of course, the first thing is that they will need to definitely identify their debt from the credit bureau and their repayment capability. They will also need to acknowledge their debt. Okay, having a debt doesn't mean to say this person is a bad person. Advise your client to list down all their debt types, balance, interest rate, and minimum payment. Set an intention to pay off their debts. And also, do not procrastinate and need to act fast, and also use the debt game plan. In a situation where there will be a few situations for this debt game plan, yeah. The first situation is that you actually still can afford to pay using your existing salary, okay, then you should use the DIY method. Now, DIY method, the first method is called the snowball method. This means to say paying off the debt with the smallest balances first while paying the minimum payment on the larger debts. So this has a psychological benefit because you will see a number of loans outstanding you have reducing over time. Another method is called the avalanche method lah. This is the second more recommended method, or the reverse pyramid method. This is a little bit difficult, okay, because this involves paying the debt with the highest interest first and pay the minimum amount for the rest of the loan. So for technically speaking, for example, you have this kind of yours, you have 2 credit card debts, one with 18% interest, the other one is 12% interest. For avalanche method, you pay the 18% interest first. But let me tell you something. When your client, okay, have the intention to pay off their debts already, right? No matter snowball method lah or avalanche method, which one is better is actually up to their comfort. So long that they start paying their debt slowly and steadily, at least they are able to start. So whichever method, okay, wherever method that's comfortable for them, they should then go for it. But financially speaking, avalanche method makes more sense lah, so that you'll be able to save on the interest. Okay, now situation number 2. It is the situation that you can no longer to pay off using your existing salary. Means to say your cash flow is so tight that you cannot pay anymore to your financial loan already. The first thing first is that, of course, is there is the best product that you want to use where is the interest is 0% or very, very low interest payment with the same existing bank. So you can consolidate same bank cards to one account and get a lower rate. Okay, but sometimes this option might not be applicable lah. Then you can consider going for balance transfer. So, which is where you transfer the balance of your debt in the credit card to another one. So this, by doing this, increases the period of which you have to pay back. So you have, say, about 6 months or 12 months at 0% instead of 12 to 18%. At least they will be able to cushion the impact of the interest rate. And last but not least is actually, if all of the above is not available for you, okay, then you can consider to look for personal loan that you can take to pay off all the amount of something across multiple credit cards or loans. Now, these methods allows you to just pay off one loan instead of many and increase the tenure for you to pay it off. Now, what it means to say is that right now, maybe this client of yours is paying 1,000 ringgit for their personal loan, total up 1,000 ringgit, and he can't pay off using his current salary already. So what he will do is that he will consolidate all these loans together with another bank or with the existing bank. Instead of paying 1,000 ringgit per month for the next 5 years, he will then stretch it to 10 years to paying about only 500 ringgit per month for the next 10 years. That would actually means to say you are increasing your tenure, you're increasing the tenure of the loan, and also at the same time, you're increasing your interest. Okay. So because you are increasing your tenure, so your interest cost will also increase with that sense. So for example, if assuming that this client of yours only need to consolidate 50,000, but if the bank offers you 80,000, of course, they will be tempted to get extra cash. But bear in mind, your client will still need to be paying for this extra cash. So as such, do advise just to take the amount that is sufficient to pay back their debts, so that they don't have to pay, they can only pay a lesser amount of installment and be able to settle their debt faster. Another way is actually through your home loan top up. What does it mean? It means to say you can consider to refinance your property. Now, refinancing your property means to say, perhaps your property, right now your home loan remaining loan is about 300,000. But actually your property, right, the valuation is around 500,000. Means to say you can borrow up to another additional 200,000. Okay, you get the 200,000 cash from your housing loan by doing refinancing. But do take note is that when it comes to refinancing, there are some fees involved as well. What are the fees? The fees will be legal fee law, and then also some of the admin fees, valuation fees, as well as stamp duty as well. Okay, so it varies according to the bank. So you will need to take into consideration whether the charges, the fee, when you do refinancing, does it make sense for you to do so? Well, you continue with this one, or you can consider other options like the debt consolidation using your personal loan. Now, In the situation where can no longer available, just now the previous two situation, you can't take it at all, your client cannot take at all, but no banks are able to offer to them, then they can consider to speak to AKPK, Agency Counseling dan Pengurusan Kredit. Now, AKPK provides debt management program that is free of charge because they are a statutory organization or agencies created by Bank Negara to help those in debt. So you can drop AKPK a call or you can walk into their office where they will assign an officer to look at your case. Now, AKPK officer would represent you to negotiate a debt game plan, a repayment plan with the bank. So this will allow you to get assistance and rescheduling of that repayment plan with the bank. Because the moment this client of yours is in the situation that they need to talk to AKPK to get help, right? When they want to negotiate with the bank for better repayment, the bank will ignore you and just file a bankruptcy letter for you. So AKPK will be able to represent your client to negotiate a debt repayment plan that makes sense that this client of yours can repay. So by doing this will allow them to get assistance and rescheduling of debt without declaring them as a bankrupt. Now, what is important to note is that once your client is on AKPK program, they will not be able to obtain any new loan until the existing debt that they have with the banks are fully paid for. But of course, the moment the client pay off the entire loan already, then they are out from the AKPK. Then people can no longer see that their AKPK status in their secrets report. Then they can start borrowing like a normal Malaysians. Okay, so these are some of the situations that your client can consider lah when it comes to the debt game plan. Now, remember this person, Abu. Abu earned 6,000 and also spent 6,000. Now, he had no excess or even any shortfall, but he can actually use the various tools in the previous slide to cut down his interest and also squeeze out some savings. Now, even though this person has the ability to pay off his debt using his salary, he could actually further optimize his expense with reduction in payment made to the bank on the outstanding credit card balance that he has by taking on balance transfer at below 3% rate. Okay, so this actually reduces 92% of his debt commitment to the bank, which allows for an additional 1,300 ringgit in cash that he can use for his savings lah or investment or any other areas of financial planning. Now, he now will need to find an investment asset that will be able to give him more than 3% return for him to make the transaction beneficial to him. Now, and then also, of course, we will cover this later on lah. And then we look at the other person. Baka, remember Baka? He earns 6,000, but he spends 7,500. So if Baka acts early, he will be able to repay his debt without going into a debt spiral problem. So in the situation, Baka right now actually has an existing debt of close to 3,000 ringgit per month, and his expenses is 4,500 ringgit per month. So he then take a 36,000 debt consolidation loan where he only need to pay 1,300 ringgit per month. He is able to reduce his repayment from 3,000 to 1,003. Then by doing this actually allows him the ability to repay his debt with his 6,000 salary as shown on the right hand side over here. So where do you get this product? You can go to the bank directly to get it, or you can even go to comparison market aggregator platforms in Malaysia like ringgitplus.com, Compare Hero to see where to offer or which banks offer this kind of products. Okay, now let's look at the other one is that the things to watch out for when it comes to debts. Of course, you should definitely avoid those with high interest debts, high interest rates. People can get in a very deep into debt when they take out a loan for short-term purpose okay, when they get it from money lenders or even loan sharks. So these loans generally comes with a very high double-digit interest rates. And also try to always watch out for the hidden fees. Remember when we sign any loan agreement or even any products, there are a lot of fine prints, but most often than not, we will just sign everything without reading it. So it is important to read all these things because there will be hidden agenda, hidden clause inside it. For example, your hidden fees. So borrowers who can't repay the money are charged additional fees for an extension, which puts them in even deeper into debts. And of course, this is definitely an answer is that do not entertain unlicensed people. Never ever respond to solicitation that makes borrowing sounds easy and cheap. Always read the fine print on any loan application. Seek assistance from your family members, financial planners, credit consulting agency, and to make sure that this loan is the right one for you. Now, sure, enough into reducing debt helps, but still some of them is not enough to go by each month. Then what should you do? This is where need to look at optimizing expenses and increasing income because doesn't matter whether who you are, okay? Debt and expenses is only one part of the equation. The other half is actually increasing your income in as many ways as possible. And I want to share with you few ways to increase your surplus.